Welcome to the first episode on Let's Grow Academy. My name is Manuel and I am going to be your coach. If you're a beginner Forex trader or intermediate Forex trader, this episode is going to be centered more on market structure. I'm going to be teaching you how to properly map out your structure, how to know the direction of the market, where the market is heading to. Sometimes you see traders out there, they post buy setups, they say buy from this zone, and they post sell setups, they say sell from this zone. But the problem is that without market structure, you cannot really understand why they are buying or why they are selling from this zone. So this is a video to simplify market structure for traders who still find it difficult to properly map out the structure of the market. Without wasting more time, let's dive in. First of all, before I trade the financial market on a daily basis, there are certain questions I ask myself. The first question I ask myself is, what trend is the market currently on? What trend is the market currently on? I ask myself that question all the time. Is the market on an uptrend? Is the market on a downtrend? Or is the market going sideways? Is the market on an uptrend, downtrend, or is the market going sideways? I'm going to explain what an uptrend market is for you. To be on an uptrend, market has to create series of higher highs and higher lows. Price has to create series of higher highs and higher lows. Then for market to be on a downtrend, price has to create series of lower highs and lower lows. I'm going to explain, but I just want you to understand that for price to be on an uptrend, it has to create series of higher highs and higher lows. And for price to be on an uptrend, it has to create series of lower highs and lower lows. Lower highs and lower lows. Now, for an uptrend, like I said, price has to create series of higher highs and higher lows. I'm waiting for price to create a high. This becomes a high. And then price has to print a low. I'm expecting price to take out this high. If price takes out this high, then price has created a high, a low, and another high. I expect price to create another low, then create another high, then create another low, and then create another high. That's what I'm talking about. Now, market has created a high, right? I call it a higher high. For higher highs, you can abbreviate it by using HH, double H. And for higher lows, you can abbreviate it by using HN low. That's HN low. You use HH for higher highs and then HN low for higher lows. Now, price has created a higher high. Now, this lowest part becomes our higher low, and then price creates another higher high. Price puts in another higher low, and then price puts in another higher high, and price puts in another higher low. Then price creates another higher high. Now, once I see this structure in the market, it tells me that the market is on an uptrend. This is an uptrend market. And once market is on an uptrend, there is only one thing I seek to do in this market, and that is to buy. Now, for a downtrend market, I want market to create series of lower highs and lower lows. Call it lower highs and lower low. You can use LH and LN for it. Lower highs and lower lows. Now, Here is what I'm talking about. I want price to create a high, create a low, then give me another high, but directly below the previous high, then another low, and then another high, and then another low. Now this is a downtrend market. This is a downtrend market. This is what a downtrend market looks like. Now this high becomes our lower high. Then below the lower high is our lower low. Then we have another lower high, and then we have a lower low, and then we have a lower high here, and then we have a lower low here. Now price is creating series of lower highs and lower lows, lower highs and lower lows. I want you to notice something. Each lower high is lower than the previous lower high. This lower high is lower than this. This lower high is lower than this. And each lower low is far more below the previous lower low. This lower low is below this lower low. This lower low is below this lower low. Then, once I see this, there is only one thing I should be doing in this type of market. I should be selling the forex market. I should take sell trades, not buy trades. Once I see this, I should only take sell trades. I can take a buy, it's called counter trend. That's going to be another episode. But for this episode, I'm talking about market structure. I should be selling because market is on a downtrend. Now, we expect price to keep creating higher highs and higher lows and higher highs and higher lows and lower highs and lower lows and lower highs and lower lows and lower highs and lower lows. Yes, market does that. Market does not do that in such format. This is too simple. Market creates a more complex highs and lows for traders. Here's the thing. We expect price to create higher highs and higher lows that look like this, right? Yes, but it doesn't. Here's what price does. It creates a high, creates a low, then in between the high and low, price creates another high, creates another low, creates another high, creates another low, then takes out the previous high, comes down again, creates a high, creates a low, creates a high, creates another low, then breaks this, and then price does that again, comes back down, creates this again, creates this, creates this, creates this, and breaks this. Let me explain for you. I'm going to explain so that you understand properly what the market did here. Now, we expect price to give us this type of structure. Price will not do that. What we are going to see in the chart are mainly these type of structures. This structure. Now, the same thing we are seeing here, price creating series of higher highs and higher lows, is the same thing price is doing here. But this is much more technical. It's much more technical. Now, this is a high. Call it the higher high. Now, this is a low. We call it the higher low. But before we call this place higher highs and higher lows, there is something we expect the market to do. We expect price to do something. There is something we expect the forex market to do. And that is the third thing we're going to be looking at here. And the third thing we're going to be looking at is we expect price to break structure. This is called valid BOS, valid break of structure. We expect price to break structure to the upside. What do I mean by that? We expect price to take out the previous higher high. Price is supposed to take out the previous higher high before we confirm that market is on an uptrend. If you look at the previous drawing here, you see that price took out this previous high, and then this high took out this previous high, and then this high took out this previous high. We call it a break of structure. Call it BOS, break of structure. Break of structure to the upside. So market just broke structure to the upside, thereby creating another high. And then market created a low, then went back and broke this high, giving us another break of structure. Giving us another break of structure. The market creates a low and then takes out this high here, giving us another break of structure. This becomes the next break of structure. And once market breaks structure to the upside, we confirm that market is on an uptrend. The price is bullish. You also call it bullish. The price is bullish. But if price breaks to the downside, we say that price is bearish, or that price is on a downtrend. This is a break of structure to the downside. It means the lower part, the lower low, has to be broken. Now, price breaks the last low, the lower low, goes back, creates a lower high, comes down and breaks the recent low again. So what price is just doing? Price is just creating series of lower lows and lower highs, lower lows and lower highs, signifying that price is on a downtrend. Market is selling. It's bearish. You also call it bearish move. This is the bullish movement. This is the bearish movement. So I want you to take note. For an uptrend, price has to create series of higher highs and higher lows. And price has to break each higher high to form a new higher high. For us to validate that the market is currently on an uptrend. For a downtrend, price has to break each lower low for us to confirm the market is on a downtrend. Now, coming back to this, price has created a higher high and a higher low. Yes, but we are not going to confirm this higher low until price does something. Until price breaks structure, until price breaks the previous higher high. And if you look at this, you see that this is the previous higher high. And price breaks this high. When price breaks this high, we then confirm the lowest part of the move we then confirm the lowest part of that move to be our higher low. Price has broken this high, yes. But then where is our higher low? We have a low here, we have a low here, we have another low here. But then the lowest part becomes our higher low. That's the only time we are going to confirm a higher low. That's one. Then the next thing we want to do is to confirm the new higher high. Now, price, for us to confirm this high as a higher high, there is something price has to do next. And that brings us to the fourth criteria, which is price has to take out an inducement for us to confirm a higher high. If you notice now, the question you're going to ask yourself is, what is an inducement? What is an inducement? Now, an inducement is a valid retracement after a break of structure, or a valid retracement before a break of structure. Now, remember I told you that this is a break of structure and this is a break of structure. When price breaks structure to the downside, we confirm bearish movement. When price breaks structure to the upside, we confirm bullish movement. And now, for us to confirm our higher low, price has to break the previous higher high. Then for us to confirm the new higher high, price has to take out an inducement. And we get to understand that an inducement is a valid retracement after a break of structure, or a valid retracement before a break of structure. That's what an inducement is all about. Now the question is, where exactly is our inducement? Now, remember we said inducement is a valid retracement. Why is this not a higher high? Why is this not a higher high? And then why is this level not a higher low? It's not. These levels are internal moves. We call them internal structures, internal moves. I call them internal moves. These are internal moves found inside the main move. Internal moves. And these internal moves consist of corrective move. This move to the upside, we call it corrective move. Corrective move. Corrective move. Let me zoom in so you see. We call it corrective move. And then a retracement move. Call this retracement move. Retracement move. This is a retracement move. Then price creates another corrective move. Now this is a corrective move. Then we have another retracement move. Now this is a retracement move. Now, a valid inducement is a valid retracement move after a break of structure, or a valid retracement move before a break of structure. Now this is a break of structure. Price broke to the upside, signaling that it's on a bullish trend. Yes, very valid, correct. But then we want to confirm our next high. Now we need price to take out the first and recent inducement. Now, inducement is not just a valid retracement after a break of structure or a valid retracement before a break of structure. Inducement is also the first retracement, the first valid retracement after or before a break of structure. The first valid retracement after or before a break of structure. Now, this is a break of structure. Now, these are retracements. We have a retracement here, we have a retracement move here. I will say the first valid retracement move. Now, price broke structure, yes. Now, before we confirm this high as our next higher high, we expect price to come and take out the first valid retracement move. The first valid retracement move. Price has to take out the first valid retracement move. That is what price has to do. Now, this is a retracement, and it is the first retracement. Now, how do we confirm that this retracement is valid? We confirm that this retracement is valid if price took out or has first taken out the high of that move. This is the retracement move. Now, price has to take out the high. Price has to take out the high. This is the high. This is the low. Now you see, price took out the high. Then we then confirm this because it is the first recent and valid retracement move. We then confirm it as our inducement. You can also call it liquidity. Inducement liquidity. The forex market is moving, is not moving because it just wants to move. No, it grabs liquidity. It grabs money. That is how the forex market moves. It moves by grabbing liquidities, money. Where is the money? That is where it goes to. Now, as you can see, once price takes out this inducement, the lowest part, we map out the lowest part. This whole move becomes our inducement, but then we map out the lowest part. Now, price takes out this inducement. We then confirm this high as our higher high. We then confirm this high as our higher high. Why? Because price has taken out the inducement. Now we have our higher high, our new high. Why? Because price took out the first and the recent inducement. Now, the next thing we are going to be doing is to look for our higher low. Is to look for our higher low, or price has taken out the inducement. Now the next thing we are to look for in this market is our swing point. We are looking for our swing point. Now, what is a swing point? Now, a swing point is where you should be looking to buy or sell the forex market. It's that simple. Where you should be looking to buy or sell the forex market. That is our swing point. Now, for this type of structure, for an uptrend, where exactly is our first swing point? Now, our first swing point is the last higher low, the previous higher low, and the recent higher high becomes our swing point. Now, since we know that market is on an uptrend, it has taken out the inducement, and our recent swing point is the previous higher low and the recent higher high. Where are we to buy? Where are we to place our buy orders? Since price has taken out the liquidity, we expect price to push to the upside to go and break structure. push to the upside, and go break structure. Now, this is where we are to be buying. This is where we are to place our buy orders. We are going to buy from this zone straight to the next break of structure. Straight to the next break of structure. Now, price broke structure again to the upside. And what do I mean by break of structure? It took out the recent high. Now, if price takes out the recent high, which is the higher high, we then confirm the lowest part before the break of structure as our higher low. Price has taken out the higher high. Now, where is the lowest part before this break of structure? This is the lowest part. Here is the lowest part. Directly before the break of structure, this is the lowest part. So we are going to call this our higher low. Now, price has created a new higher high, and price has taken out the previous higher high and has given us a new higher low, right? Yes. Now, like I say, we have a higher high now, we have a higher low, and we have a valid break of structure. Now what next? We expect price to take out the inducement again. And remember that I said an inducement is a retracement move before or after a break of structure. Now, price has broken structure here. There is no inducement, there is no retracement move before this break of structure. So now we expect price to give us a retracement after the break of structure. This is the next thing we expect price to do. Retracement after the break of structure. Now, after the break of structure, price retraced. We have a new retracement here. This is a retracement move. And remember that I said for us to confirm or validate this retracement move, the high has to be broken. The high has to be broken. Now, the high was broken to the upside, which means that this retracement is what is valid. And then we map out the low and call it our inducement and name it our inducement. Now can you see? And price takes out the inducement as expected. Now, as price has taken out this inducement, what next? We remember that if price takes out the inducement, what then do we confirm? We confirm the highest place before the inducement was taken out as our higher high. Now price has taken out the inducement. Where is the highest place before price took out the inducement? This high. Now we are going to confirm here as our new higher high. Not this, but this as the new higher high. Then price comes down. Then the next question we'll ask ourselves again is, where is my swing point? Where am I to buy from? Where am I to place my buy order? Now, remember I told you that your swing point is your previous higher low for an uptrend and your recent higher high. So this region becomes your swing point. So price is now here. So I am supposed to place my buy order within this region. This is where I am supposed to place my buy order. From here, buy the forex market up to the next break of structure. As you see, price bought, kept buying, retraced a little bit, and kept going up and broke the recent higher high, causing a break of structure. And if you want to go again, you keep repeating the cycle over and over and over and over again. Now, this is part one. Now, for a downtrend, remember I told you price have to create series of lower highs and lower lows. But this time around, it is not the one we want to see. Price will have to create corrective and retracement moves within the high and the low region. Now, price comes in, gives us a retracement move, then gives us a corrective move, gives us another retracement move, then breakdown, come again, give us this, takes this out, and breaks again, gives us this, and this, and this, and price confirms this low, confirms this, and does this before breaking again. Now, this is what a downward trend actually looks like. Remember that I told you that this high is our lower high, and this low is our lower low. But then before we confirm our lower high and our lower low, there are certain criteria that has to be put in place. Now, understand that this is our lower high and this is our lower low. Price is creating series of lower highs and lower lows. But all these highs and lows are not our lower highs and lower lows. Not all of them are lower highs and lower lows. Now, how do we identify our lower high and our lower low? First thing we are supposed to take note of is our lower high and lower low. Then the next thing we are going to take note of is our valid break of structure. Remember that I told you for price to break structure, it has to take out a previous higher high for an uptrend. Now, the reverse is the case. Price has to take out a previous lower low for a downtrend. For a downtrend, price has to take out a previous lower low. Now, if this was our low, if this was our previous lower low, now price broke structure to what? To the downside. It broke structure to the downside, and we call it a break of structure, BOS. Now, price has taken out the previous lower low. Before we confirm our lower high, price has to take out the previous lower low, just as expected. And price has taken out this previous lower low. Then what next? We then check the highest point before the break of structure. Now, this is the highest point. Okay, let's call this the previous lower high. Let's call this the previous lower high. Now, this is the highest point before this break of structure occurred. We then call this point our lower high. Please don't forget to subscribe, like, and share this video. Share to your friends, other beginner traders that you know are finding it difficult to properly map out the market structure. Now, we understand that this is the last high that was created, and we call it the lower high. Now, for us to confirm our new lower low, price has to do something very important. Price has to take out an inducement. Price has to take out an inducement. Now, remember that I told you that there are two types of inducement. There is inducement before a break of structure, and there is inducement after a break of structure. Now, this is a break of structure. There is no retracement move here, because I told you that an inducement is a valid retracement move, but there is no retracement move here. So what type of inducement did market create? Market created the second type of inducement, which is inducement after a break of structure. After the break of structure, we have a retracement move. This is retracement move. This is called a retracement. We call it retracement. Retracement. Give it this line. And this becomes the corrective move. Remember, I told you these are internal structures. They are internal structures. Another retracement move. Internal structures. Inducements. Now, where is our inducement after a break of structure? Remember, I told you that an inducement is a valid retracement move in which the high must be broken for an uptrend. But for a downtrend, the reverse is the case. The low has to be broken. The reverse is the case. So this is the low of this retracement move, and it was broken here. Price broke it here, and since price broke this low, we then confirm the high as our what? As our valid. We then confirm this move as our valid inducement. I want you to understand the concept before we move over to the chart. Now, this becomes our valid inducement. Not this high. This whole retracement move becomes our inducement. But we're going to place our inducement mark on the highest candle of the retracement move, because we expect price to take out the whole retracement move, to take it out entirely. That was what price did here. It took out this whole retracement move. And if price takes out this whole retracement move, what then do we see? We then confirm the lowest part before the inducement was taken out. We confirm it to be our lower low. We confirm it to be our. Now, this becomes our lower low. What else? Now, the next thing we are going to be looking for is our swing point. Remember, I told you, our swing point. Now, where is our swing point? For a downward movement, for a downtrend, our swing point is the previous lower high. Take note of it. The previous lower high and the recent lower low. the previous lower high and the recent lower low. This becomes our swing point. Remember, I told you that a swing point is a region where we are going to be placing our buy or sell order. I'm not seeking to sell above, no, I'm seeking to sell within the swing point. Now, since price is here and price has taken out the inducement, I'm expecting price to do what? To move downwards. So I'm expecting price to sell. So I will be placing my sell orders here on this point. This is where I'll be selling from, this point. Now, I've gotten my what? My sell, where I'm going to be selling the market from. Now, and you see, the market from there sold and broke the recent low, the recent lower low, giving us a new break of structure. I know I'm taking my time and I'm explaining this thing so that you will understand properly what a break of structure is and the rest of them. So now, this is a valid break of structure. What next? We are looking for a retracement move for price to do what? To take out an inducement. But before that, we've not yet confirmed our lower high, and we are going to do that now. Where then becomes our lower high? Remember, I told you that your lower high is going to be the highest point after price broke structure to the downside, and the highest point here is this. This becomes our lower high. Now, after price has created this lower high, what else are we expecting price to do? We're expecting price to take out an inducement, right? Yes, we're expecting price to take out an inducement. Now, as you can see, we have a retracement move here. We have a retracement move here. This is a retracement move, right? Yes, this is a retracement move. Now, for us to validate this retracement move, the low has to be broken. Remember that. Now the low has to be broken. Now the low has been broken, and then we expect price to take out the whole retracement move, thereby placing our inducement at the highest candle of the retracement move for a downtrend. This becomes our inducement. You see, price takes out the inducement. Now, this type of inducement is inducement after a break of structure. Now, price has taken out the inducement. What next? We have to confirm our lower low, right? Yes, we have to confirm our lower low. Now, this low is the lowest part before inducement was taken out. So automatically, this low becomes our lower low. This becomes our lower low. This becomes our lower low. This becomes our lower low. Now, what next? The next thing we have to do is to find our swing point. Our swing point. Now, remember that I told you that our swing point is where we want to sell the Forex market from. So our swing point is going to be the previous lower high and the recent lower low. This becomes our swing point. This becomes our swing point. Now, we expect price. What we do here is that we expect price to sell after taking out the inducement and to give us a new break of structure. There is a case where price will take out the lower high. This lower high, price will take it out. I'm still going to come to that later. A case where price takes out the lower high. Now, where am I to sell from? From this. I'm to sell from this region. I'm to sell from this region. This is where I am to sell from. This region. Now, and you see, price came down and broke structure again to the downside, giving us another break of structure. Now, price has broken structure to the downside, right? Yes. Now, what next? Same thing, same cycle, consistently. The next thing we are looking for is our lower high. Which high becomes our lower high? The highest place before the break of structure is our lower high. This is the highest place before the break of structure. So this becomes our lower high. The highest place before the break of structure is our lower high. Now, this becomes our lower high. Very valid. What next? Inducement. Where is our valid retracement? You see, this is a retracement. This is a retracement, but it is not a valid retracement. Why? Because this low, the low of the retracement was not broken. It was not broken. Price did not break it. So where becomes our valid retracement? This is our valid retracement. Why? Because the low of that retracement move was broken. It was broken. And since it was broken, we then map out the high and place our inducement mark there, because we want price to take out the whole retracement move. Now, see what price did? Price came. You see, this was not the value retracement. It was an equal low. It was equal. The price came and broke the inducement. Took out the inducement. And then the next thing we ask ourselves is, where is our swing point? Price has taken out the inducement, which means the low. Yes, price has taken out the inducement, right? Yes, which means the low before the inducement becomes our lower low. The low before the inducement was taken out becomes our lower low. Now, where is our swing point? Where am I selling from? I am selling from the previous lower high and the recent lower low. This becomes my swing point. That becomes my swing point. This becomes my swing point. And then price does what? Comes back down to give us a new break of structure, to break this lower low. Please do well to like, subscribe and share this video. you know a beginner forex trader who is in need of this video, do well to share this video to the person, please. Now, this is how to properly map out your market structure. This is how to properly map out your market structure. For an uptrend, a higher high, a higher low, a valid break of structure, an inducement taking out, a swing point. To confirm your higher high, price has to take out the inducement. For a downtrend, lower highs, lower lows, valid break of structure, price has to take out the inducement, and then we find our swing point. To confirm our lower low, to confirm our lower high, our lower low, price has to take out the inducement. What is an inducement? A valid retracement move after or before a break of structure, but the first valid retracement move after or before a break of structure is our inducement. Now, coming to a scenario. There is a scenario where price creates a new higher low, breaks structure to the upside, and then takes out the recent higher low, and then takes out the recent higher low. We call that a change of character. Change of character. Change of character. Change. The price takes out the recent higher low or the recent lower high. Call it a change of character. Now, what is this change of character? Now, this is our recent high, right? This is our recent higher low. For an uptrend market, this is our recent higher low. Now, I'm going to delete this. You have the video. Do well to watch it again and again till you master it properly. And yeah, I'm deleting this. So now, this is our recent higher low, right? Yes, why? Because price broke structure to the upside, and we say that our higher low is the lowest part after a break of structure, which is this. Now, the next thing we're expecting price to do is take out an inducement, right? Yes, and we say that the inducement is a retracement move, that the high was broken, for an uptrend. This is our inducement. Now, price comes back down, takes out the inducement, and rather than breaking structure to the upside, price takes out the higher low. Price does this. It takes out the higher low. Now, price taking out this higher low signifies that the market signifies that, hey, Manuel, I am no longer on an uptrend. Now, I am changing character to a downtrend. I'm turning I'm changing from bullish to bearish. I'm changing from bullish to bearish market structure. I'm changing from bullish to bearish market structure. Now, where is the bearish market structure? I'll show you. Now, if price takes out your higher low, if price takes out your higher low, it becomes a change of character. We then call it a change of character. Why? Because price took out your higher low. Price has taken out the higher low. So we call it a change of character, which means we are no longer supposed to buy once we see a change of character. We should now be expecting what? Sales. We should be expecting sales. A change of character signifies that the market is about to sell. So we're supposed to be looking for sales from henceforth. But before we look for this sale, there is something the market has to do. Again, the cycle repeats itself again. Price has to take out an inducement. Price has to take out an inducement. And understand that I told you that there are two types of inducement. There is inducement after a break of structure, and there is inducement before a break of structure. Now, for a change of character, we call it chalk. C-H-O-C-H. Chalk. Now, for a change of character, there are two types of inducement. There is inducement after a change of character. And there is inducement before a change of character. There is inducement after a change of character, and there is inducement before a change of character. It's that simple. Now, there is no inducement here, right? There is no retracement move here. But if there were to be a retracement move, it would be like this. It would be something like this. Before price changes character, it would be something like this. This would be a retracement move. Now, we say for us to confirm that price is now bearish, is now on a downtrend, price has to take out the inducement after a change of character. Now, where is the inducement? Now, we said there are two types of inducement when it comes to change of character: inducement after a change of character and inducement before a change of character. And we know that an inducement is a retracement move. So this is a retracement move. Is it a valid retracement move? Yes. Why? Because the low has been broken. Can you see the downtrend type of inducement? Because the low has been broken. Therefore, this becomes our inducement. Can you see? Now we expect price to take out this inducement, and then the same thing continues for a downtrend. If price takes out this inducement, what next? If price takes out this inducement, we then confirm the lowest part, just like this. If price takes out the inducement, We then confirm the lowest part as our what? Our lower low. Price takes out the inducement. We then confirm this lowest part as our what? As our lower low. As our lower low. Now, price has taken out the inducement and this becomes our lower low. Then the cycle repeats itself again. Where is our swing point for sales? Our swing point becomes this and this. Now, you can just call here a high. You can call here a high. Not a higher high because it was not broken to the upside. You can just call it a high. Now, from this high to the recent lower low becomes our swing point. So, if I'm to sell the forex market, I am supposed to sell from this point. From this point. This is where I'm supposed to sell from. Now, as you can see, and if market is supposed to sell, I expect price to take out the lower low, just like before. Take out the lower low and give us a new break of structure. Now I expect price to take out this low and give us a new break of structure. And then the cycle continues from here. The cycle, then you will start seeing the market do this consistently, do this consistently. Means we are now on a downtrend. We are no longer on an uptrend. We are now on a downtrend market. This is what it means. Now, to transition from a downtrend market to an uptrend market, price has to take out the recent lower high, right? Yes, just like an uptrend, price has to take out the recent higher low, but here price has to take out the recent lower high. Now, this becomes our low, our lower high. Now, if price takes this out, price has taken it out. This automatically becomes our change of character. Market signifying that, hey Manuel, I am no longer on a downtrend. I'm changing from bearish to bullish. So I'm not expecting you to be selling. I'm expecting you to buy. Now, as price has taken out the lower high, changing character to the upside, what then? We then look for our inducement again. And remember, for change of character, still the same thing. Inducement after a change of character or inducement before a change of character. And there is no inducement, there's no retracement move before a change of character. So we expect price to give us a retracement move after the change of character. Can you see? This is a retracement move after the change of character. This is a retracement move before the change of character. And this is a retracement move after the change of character. For us to validate this, the high has to be broken. The high has to be broken and the low becomes, we map out the lowest parts and call it our inducement. So price has to take out this inducement. Price has to take this out. But here's the thing, price can decide to transfer inducement. Transfer of inducement. There is something called transfer of inducement, where price neglects this inducement and creates a new one. Price neglects this inducement and creates a new one. Price neglects this inducement and creates a new one. Which means, since price did not take out this inducement and price came and created a new retracement move and confirmed that retracement move by taking out the high, we then transfer this inducement from this point to this point. Transfer of inducement. And then price can come and take out the inducement or still create a new one. But until price takes out the first and the recent inducement, until price takes out the first valid retracement, which we call an inducement, until price takes out the first valid retracement, which we call an inducement, you are not expected to buy. Now price has transferred inducement again. Price has transferred the liquidity. Inducement is also called liquidity, like I told you earlier. So price has transferred the inducement again. And then price takes out the first and recent inducement. Then after price takes out the inducement, we then confirm this high. Remember, for an uptrend, price takes out the inducement, the highest point becomes our higher high. Now we then confirm here this high to become our higher high. This becomes our higher high. Now we then look for our swing point, like always, and like I told you, your swing point will be this low, the lowest part for an uptrend. Remember, your swing point will be the lowest part and the recent high. This becomes our swing point. So we are expected to buy from this zone. Up. Now for beginner forex traders, I always get this question. Some people say, if you're buying, are you making profits? Yes. If market is on an uptrend and you're buying, you're making profit. If market is on a downtrend and you're selling, you're making profit. If you're selling and market is selling, you're likely to make profit. And if you're buying and the market is on an uptrend and market is buying, you're going to be making profit as well. There are scenarios where if you're buying and the market is selling, you still make profits. They are called counter trends. And there's a scenario if the market is selling and you're buying, you still make profits. If the market is selling, this is the sell move, this is the move we are selling from. But there are persons that will buy this up move to taking out these inducements. That's for a whole different episode on its own, which I'm going to teach later. But for now, I want you to understand how you can properly map out structure when it comes to the forex market. My name is Manuel. Remember, In life, there are no excuses. You either do it or you don't do it. Also, don't forget to like, share, and subscribe to the channel. And always come back every week for a new video because I'm going to be uploading new videos every week. New videos every week. Insights on how to create the Forex market. It's going to be a good journey. Thank you. See you in the next episode.